is that this is what market generally does. Let's say for a bullish market, it will be making lower highs and lower lows, lower highs, lower lows, lower highs. So now this move right here, okay, it will come around something. Let me just draw it and then breaks the change of character. Maybe leave some liquidity somewhere here, and then come sweep the liquidity around here, and then goes higher. So this is what market does. Here we are in a downtrend, and then this last move right here, this is what is called a liquidity grab. So I usually don't count this as a valid move because it's grabbing on the liquidity that's somewhere here. This is basically my strategy. There's liquidity standing somewhere here, so it grabs on this liquidity before now getting strength to actually go up. So this is a liquidity grab here. So basically this is lower high, lower low, lower high, lower low, lower high. So now this is our last lower high. So for when it breaks this will be the change of character right here, because now it changes the character. It's now turning from a downtrend to an uptrend because it's moving lower, and then it changes to an uptrend. And then now this one here will be this move right here will now be the break of structure. Let me write break of structure. This one here will be the change of character. So this is what price basically does. It will come here, it was a liquidity sweep, it comes up the change of character, but because this is a level, this is a resistance level, it won't easily break, so it comes down. Actually it might even come not that deep, it might come up to somewhere around here. And now this is standing liquid, this is liquidity that it's lived here. You might find that maybe there's a fair value gap somewhere here, so it comes to get strength to break the change of character and even the break of structure. It depends on how deep it goes. If it goes up to here, it might break both. But if it's shallow, it might actually break only the change of character. Let's say if the break of structure was high, it might only break the change of character only, and not the change of and not the break of structure. So here this is what it does. It comes, sweeps on liquidity. Maybe there's a fair value gap here. Maybe there's an order block somewhere around here. It sweeps on it and goes, but just as it sweeps, it leaves liquidity here. That will be mitigated later. I usually see the market as like a liquidity hunter. It hunts for liquidity. Liquidity is what gives the market strength to move either up or down. So now this is standing liquidity right here, which it must come back for. This is fractal. This is fractal. You can see it in any time frame, be it the 5-minute, 4-hour, daily, and I'll show you guys. So it comes and then breaks the structure. Normally around here it's usually where the money market makers, you'll see a strong push to the upside over here, like a strong candle which breaks all this and then leaves a lot of liquidity here around somewhere here, especially where it changes the character. So then you'll find market usually comes back to around where there's a change of character, because this is something that I noted, that before market changes the character or breaks structure mostly changing character, it breaks and leaves a lot of liquidity somewhere here. This is where the market makers come in and pour in the orders, and then poof, price goes up. When price goes up, it leaves an imbalance somewhere around here, so it comes back to fill that imbalance. When it fills that imbalance, it leaves a lot of liquidity here. So now here we have at this level here. Here we have liquidity. So now, since market is a liquidity hunter, it must come and sweep on this liquidity and this liquidity that it left here. So it comes, sweeps on this here, sweeps this liquidity and comes back to around somewhere here. Because now it's now formed a newer high. This was lower low, lower high, lower low, lower high, lower low. This was the last one here. Okay, this one here was for the break of structure. So now it breaks structure and now forms a newer high. So now this is the level of the newer high. So this will be the swing high. The swing high, and then this one here, this move that brought the swing high, this one here will be the swing low around here. Let me just move this. So this here is the swing low. So what does price do? It must come. Now that it's formed a swing high, it needs a stronger pullback for it now to break the new swing high. So now what does it do? It forms this whole pattern again. This whole same pattern here again. Now it will come back low. It comes back. It will form a low. It goes down. Just as here. Toof, 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 toof. So it goes toof, toof, toof. It goes high now. Now what is it coming for? Liquidity that was left here. Liquidity that was left on the previous low. So if okay, for the people who use the fib retracement, it comes here to around this, between here, around somewhere here. So price comes back to around somewhere here. Here you might find an order block or a fair value gap or whatever. It comes back to sweep on liquidity here. So it takes liquidity. This is liquidity here. There were stop losses. People had put stop losses below this point. So now price comes back. So now this is inducement. It induces traders to think that price will continue to go lower, because once it breaks this lower high, this swing low right here, traders will be like, okay, now price is moving back down, so now we're in a sell, so we're in a bearish market. So sellers will now come into the market. So now we'll have sells somewhere here. There'll be something like this, and then here. So this is what many people will be doing. So now this is what we call the inducement move. It induces traders to think that price has changed, but it really hasn't. It's just coming to sweep liquidity here. So what does price do? It comes, sweeps on the liquidity on that order block, and now sweeps on here, all of this inducement that people had put here, all of these stop losses here, and it sweeps and goes higher. It won't go in one step, but progressively, but strongly, it will, in this same way, it will come. Let me just show you. It comes around somewhere here, sweeps on the stop loss, it will come back here, something of the sort. Maybe it struggles to break this, comes back and sweep, goes high, and then the new break of structure, then it will come back lower, and that's how price progresses. So if you're keen, you'll notice that this is somehow this. It comes, see this right here is this right here. It comes here, change of character. Coincidentally, it's actually at around the same place. But anyway, it comes around somewhere here. It can't break, so it consolidates a bit, gaining strength and picking up orders to break. Then boom, it goes, breaks and forms a new swing high. Now the new swing high will be here. See, so now at this point we're right here, so it comes back lower for liquidity that it left. around somewhere here. So there'll be liquidity somewhere here. Let me just show you. So I see here it try to break, but it can't, so it goes down, sits on liquidity and goes up. This is what price generally does. If you understand this, life will be easy for you in trading. Price, basically what I'm saying from this is that price always and will always look for liquidity. It's like a liquidity hunter. It feeds on liquidity. That is what gives it strength to move up or down. Just like the way humans eat food and drink water, price in the market eats liquidity and drinks on stop losses. So that's what basically price does. So if you can identify this in any market, liquidity grab, inducement, liquidity here, inducement here, and then they move. So now our point of interest is here. This is where you want to enter your trade, around somewhere here. You can put your stop loss here, take profit all the way up there. So that's it, guys. It's a pretty simple strategy. Price grabs liquidity, breaks structure, it leaves behind liquidity, it turns, sweeps on that liquidity, leaves behind an inducement, goes down into the point of interest, and that's where your entry is. It's as simple as that. If you can identify this in any time frame, any pair, you'll be good to go. This is the holy grail of strategies. And that's it for today, guys. It's been real. Remember to like, remember to subscribe. Join me in this journey as I'll partake this strategy. Thank you.